Hey guys, welcome back to my channel. Today we are going over the average true range indicator and looking at stop loss. I made a post on this today and told you guys that I would break it down a little bit for you in a video. So that's what we're going to do. I will do a video on the other two methods as well, but today we'll just focus on this one. It's going to be pretty short and sweet because there's not all that much to it, to be honest with you. So first of all, the average true range indicator, I'll show you where to find it in TradingView. Just go to indicators, guys. Super simple, just like you would with any other indicator. It's actually one of the first ones there, but you can also type it in if you, we're being silly and felt like doing that. But that's where it is. You just click it, it applies. You don't need to fool around with it. You can change the color, I guess, if you wanted to, but just plot it and it's good the way it is. First of all, I'll kind of explain what the average true range is. Basically, what this little line is telling you is the average movement that your candle is moving in a day. So I say candle because it's based on the time frame you look at. So right now we're looking at the 4-hour time frame, and basically if we are looking at these candles, like let's grab our little stop or time, date, and price range tool here. Just counts pips, this little tool here, for those of you who don't know. And what we're going to do, first of all, let me get rid of that. Okay. What we're going to do is just look at like how many pips this candle moved here, right? So it's 101. So what this line is going to tell you is the average movement of these candlesticks, okay, over a certain period of time. I do believe it calculates it on a 14-day average. Don't quote me on that. I'm not going to get into like the actual breakdown of how they calculate things. If you're curious about that, you can definitely look it up. There's probably a million videos breaking down what the average true range indicator, how it calculates and stuff. I'm just going to show you how I use it. But it's giving you an average, okay, over a period of time of how far your candlesticks are moving. And if you use the daily, it's going to be different. So how do you find what that number is? Well, if you come down here and hover your mouse over the line, like let's look right here around where I just was. I think I was about here, and that's what we're going to use anyway. If you look over to the right, you can see the 0.00667 figure there. So that is your pip amount. Now that's, you do need to convert it. So you need to move your decimal place over. It's actually going to be 66.7. Okay. So what this is saying is that at this period, the average 4-hour candle is moving 66. Is that what I said? 0.4. I think that's what it was. 66.4 pips. Okay. So that's really going to help you in placing a stop loss because it's telling you the average movement that price is making. And that's going to help you from making your stops too tight, which is what a lot of us do, I think. And that's something I've been open with you guys about, that even I've had to work on, is not placing it so tight. I know a lot of us are like, we really want to get those sniper entries, and that's great. But if you have a pair that, especially in these market conditions, it has a lot of volatility, or you're seeing a lot of long wicks, you do really need to keep in mind what those movements end up kind of moving to before placing a stop loss, to ensure that you're not getting stopped out too early. So I'm going to give you an example. So looking at this pair here, I'm going to look at, this is actually a really good level to look at here. I'm going to draw in a zone really quick because price is at a level of resistance right here. So let's just really quickly, I'm not even going to put a zone in actually, guys. I'm just going to put a resistance line in here because we have a really good one there. And I'm just going to change this to black. Not that I really need to do that, but okay. Just going to change that to black. And let's just say, obviously, market is closed right now, but we had rejection here and you ended up taking a short. I'm not saying to do that. I'm not actually in real time analyzing the pair. But just to give you an example, what I would do, and obviously our average true range has decreased quite a bit this week. We can see prices kind of flattening out a little bit. We're consolidating a bit. So it's gone down to actually like it's about 32 right now. So 31.9. Remember, you have to move your decimal places over. You're probably having a hard time seeing that number actually now that I think about it, but it's 0.00319. And what you're going to do, so that means you don't want to have your stop loss any less than that, because that's generally how much that's generally how far your candle is ranging. I can't speak here. So what we're going to do is take that same date and price range tool and bring it up to about, what did I say it was, 32 pips? 30, yeah, let's say 32. Okay, we'll round up. So we're going to bring it up to 32 pips. It's really hard to make this perfect. 32.2, that's close enough. So this is where I would place my stop. This would be 1 times your ATR, okay? So 1 times your average true range. I almost said that's where we would place, but you don't want to place it exactly at that point. And the reason is, let me see if I can write this in nicely. ATR, there we go. So 1 times your ATR. You don't want to put it right at this point because that's exactly where price has been averaging like its movement. So you want it a bit above that to give yourself some wiggle room. So you can either do 1.5 or 2 times your ATR. Now I use the 4-hour chart because I swing/day trade, just depending, guys, on the entry. So you would actually bring it up, or you would multiply this number by 2, which would be 64. I know it's 0.2 there, but I meant to put 32. So it'd be 64. So you drag that up, you'd find that level at 64 pips, and that's how you'd place your stop loss. So very, very easy, guys. And that's really all there is to it. There's not a whole lot more I can really say about that. 2 times your ATRs, that's generally what I use. It's what's been working really, really well for me. Now, keep in mind, when you're doing this, it has to line up with your risk reward. So if you're someone who's scalping, you're going to have to go to the lower time frames and see if that works for you. Because if 2 times your ATR is giving you a risk reward of less than like 1.5, sorry, that's not going to work. You still want your risk reward to be, at least, let's say 1.5 or above. I like to go to like 1.2, but that's up to you guys. But do keep that in mind. You don't want to be risking the same or more than what you're standing to gain in a position. Okay. So just keep that in mind. Hopefully that cleared some stuff up for you. Let me know if you have any questions about it. I find it very simple. I find it extremely valuable because it's really just pulling that information from the charts. Like, it's not like most indicators that are trying to kind of show you a trend, or they're doing all these calculations and based on momentum and things like that. It's really not. It's just telling you the average movement that price is making. So it's super straightforward and a really great tool to help you with your stop loss. Hopefully this helped you guys, and don't forget to subscribe to my channel. I forgot to say that when I welcome you to the video, and I'll see you guys in the next one. And also give me some tips on what you want to see. I should be filming quite a bit this week. All right, guys, see you in the next vid.